Singapore's economy is now expected to grow by 6.5% this year, instead of the previous estimate of 5.8% made last quarter. Strong numbers from sectors like manufacturing means private sector economists have turned even more bullish in the latest survey by the country's central bank. The figure also exceeds the Trade and Industry Ministry's forecast of between 4 and 6%.
Some businesses took a hit during tighter restrictions over the month. Still, economists are upbeat about overall GDP growth for this year. The second quarter is expected to grow by 15% compared to last year. One reason is that it comes off a low base from last year's circuit breaker measures when almost all businesses came to a standstill. Meantime, recent heightened measures only affected some parts of the economy, along with the fact that the first quarter did better than expected.
We looked at the sectors affected by mobility restrictions. For Singapore, we estimate that less than a quarter, probably around 24 to 25% of the industries will actually be affected by these phase 2 heightened alert measures. Potentially, the impact to growth is maybe going to be less than 0.5 percentage points for full year in terms of the hit to GDP growth.
Mostly, these sectors are accommodation and food services sectors that did poorly. On the flip side, manufacturing did better than expected, with strong exports and industrial production numbers.
If we look at manufacturing, they are able to operate almost normally through some preventive measures against COVID-19. At the same time, there's strong demand for certain products like electronics and biomedical manufacturing. In contrast, I think the F&B sector has been adversely impacted by the absence of dining in. And even if things go back to normal, we don't expect a return back to 100% capacity.
This means growth will be uneven going forward and will continue so long as borders are not fully open. At the same time, headline inflation is expected to be 1.4% this year, up from 0.9%, which was the previous estimate in March. Core inflation is also set to rise more steeply at 0.8%.
On the external front, inflation pressure is also picking up. When it comes to commodity prices, real estate prices, food prices, there have been a unanimous, rapid increase in terms of prices in many parts of the world. That essentially will result into some inflationary pass-through into the domestic economy.
Economists believe Singapore's GDP growth is on the mend and should get back to pre-COVID levels by this year. Still, they say that all depends on the pandemic situation.